before we go into stock of the week, today we have we need makofi from our listeners. I remember in episode 16, if not 15,
what happened, Kigan?
we told our dear listeners to buy car and general. It was at around 36 Kenya shillings, if I remember very well. This week it crossed the 70 Kenya shillings mark. On Friday, that is the 21st of January, it closed at 68 Kenya shillings. You people, I hope you listened.
Give us your money.
So that was really good. You remember when we had conversations about Watu Credit being a growth component inside Car in General, and the expansion to Sierra Leone and Nigeria. Amazing stuff happening at Car in General. They announced their results. They actually, for guys who held Car in General, the dividend quadrupled actually.
Must be nice.
Amazing stuff happening
wonderful.
there. I'd love to see more growth coming from Car in General, and particularly from Watu Credit.
Yeah, Watu Credit is quite exciting. I think it was brilliant by them. I think Car in General should look to increase their stake in Watu from the 28% that they do have.
Yeah.
I think that would be it's a good growth opportunity for them.
Yeah, so to find that episode
are they the largest shareholders at Watu?
No, they're not.
Because then if maybe they would want to increase their stake so that they can even take it with them as they expand into these other countries.
Yeah, sure.
Because the model is still the same.
But then you might find that once Watu Credit is moving to Sierra Leone or Nigeria, you might find that probably Watu Sierra Leone, you can find that probably Car in General is the largest shareholder or Nigeria. Yeah. So to access episode 16, you can always find us on Spotify, on Anchor, Google Podcast, Apple Podcast, all the other places. Check out our episode and share with your friends and families. Now, our stock of the week is...
Yes. Actually, before we go to stock of the week, yes, listeners who are still with us up to this point, Makofi.
Yeah, Makofi.
Thank you very much for listening this long. For stock of the week, I don't know whether I should make this announcement. But we are looking for interns to help with the quality of research and what we produce going forward, especially that's one of our goals for this year. So and especially the target market are interns who are still in campus if you need to do your industrial attachment or commercial, that period, if you're on long holiday and you have time,
reach out to us. A lot is happening. We are doing so many projects, so we'd love to have particularly one of our listeners or a couple of our listeners, people who've interacted with us and our content to come on board.
It'll basically be giving you some exposure to a bit of research, bit of market analysis.
So you could drop your applications on our email.
Our email is info@Kenya's Market Map. You can also DM us on Twitter at marketmap_KE. You can also reach out to us on LinkedIn, Kenya's Market Map, Facebook, Kenya's Market Map, and also on YouTube, Kenya's Market Map. Now, let's go to stock of the week. Our stock of the week is a company known as Equity Group. Now, Equity started as Equity Builders Association. This is in the must have been the 80s, and coming into the early 90s when the current CEO and MD, that is James Mwangi, took over the stewardship of the company. That is in 1993. At that point, Equity Building Associations was actually in a bad state. It had been declared, as they're almost liquidating it, by the CBK. They had a debt of
CBK at the time.
They had a debt of 30 million Kenya shillings, and they were running an annual loss of 5 million Kenya shillings. So they were in a bad state. But then you look at Equity today and you really appreciate the work that James Mwangi and the team have done there. Amazing stuff. So Equity became a commercial bank in 2004. Then it went ahead 2 years later. It listed at the Nairobi Securities Exchange. That is in 2006. And at the point of listing, the people who had the ownership of Equity Bank before listing became instant millionaires. Yeah, because the value really went up. So Equity, we've talked about Equity here a number of times. So Equity is actually in 6 countries. It is in the DRC, in Rwanda, in Kenya, Uganda, South Sudan, and also Tanzania. Equity, the price share, as at 21st of January 2022, it closed at around 51 Kenya shillings. And I remember Dan mentioning to me before the year 2021 closed that, that Equity year to date, as of December, the share price had gone up by 50%, which was incredible. Last year, we saw the half-year results of Equity Group going to profit after tax, I think around 17 billion Kenya shillings. So I am very well satisfied and comfortable that they will cross the 30 billion mark when they announce their full year results for 2021. They'll definitely cross that mark because we saw even more growth and revamping, with the Q3 results. And so definitely, there's going to be great stuff coming up. For the guys who own Equity shares, dividends, najua hapo mnaumianga kidogo. Easter. Dividends hapo. Dividends.
I'm not a dividends guy.
You're not a dividends guy?
No, I'm not
why?
a dividends
I'm
guy.
not
I'm
a
a capital
dividends
gains guy.
But why? Capital gains, it's just you're not getting any tangible return on capital.
Even
you
if I were
sell,
to get dividends, I'll still reinvest it.
Yeah, if you bought Kind
What he's
General
saying,
at
you
31,
have to sell
You
to
may never exit.
realize your profits.
You may never exit.
so you can make an entry again.
Man, at least enjoy dividends so that you can be able to buy yourself a new shirt.
no.
A new one.
You know that, new shirt. Take someone out on a date. That kind of things.
I don't.
You
rely-
cannot
I
take
don't,
out
I
as
don't
a
rely.
family. You
I don't
cannot-
rely on dividends to take people on dates.
Hey, man,
But anyway,
excuse me.
So let's just look at
Fine.
So actually looking at some of the things that have happened with Equity Bank as you get into the operations and strategy. One of the latest happenings is of course Equity Life Assurance Kenya, which is an interesting
are
thing
hungry
to
for
see.
growth.
Yeah, I mean,
What?
amazing team at Equity Bank.
I can try and envision what the size of the company is going to be in 3-5 years.
But then in the African savannah, there is only one lion. Anyway, we are today it's Equity Bank, okay? So Equity Group was given the license to operate a life assurance in the insurance sector by the Insurance Regulatory Authority of Kenya. And this comes at an interesting point because at the back of this, sorry, I don't know who's trying to...
There's no one stop being
No.
an African.
So at the back of that, we have, let's remember that there are companies that are already running life assurance in Kenya, okay? And one of them is Britam. And Britam has had a very close relationship with Equity Group for a very long time. And there's someone, sorry about that, guys. And so an interesting development also happened where we had IFC, the International Finance Corporation, under the World Bank. What they did is that they gave Equity 14 billion Kenya shillings to lend to SMEs and small scale businesses in Kenya and actually all over the region. And this commitment by IFC came at an interesting point because we had, just before that announcement of the 14 billion, we had IFC acquiring the rest of the rest of Britam's stake at Equity Group,
12.2 billion.
Yeah, which was around 6%. Yeah. So the IFC acquired that. Now, after that, we had the facility of 14 billion
Which made
given to them.
AFC the second largest shareholder.
Yeah,
in
after
Equity now.
the BV guys from, which is some guys from Norway and the likes. Now, for me, one of the things, I connected a dot somewhere. And here is the connection. Now, of course, it was a requirement. IFC put up a requirement that, hey, we want a stake before we give this facility.
The loan, yeah.
That's why it happened. But then Britam now exiting Equity Group after 17 years, and then at the same time, Equity Life Assurance coming in, they would have been competitors. So these guys left because probably they saw competition, or it was just mutually consent that
no, they're still gonna be competitors.
They are competitors actually, because Britam has life assurance, so does Equity Life Assurance Kenya. So for me, I saw that Britam leaving Equity, the exiting, the ownership, was probably they saw this coming and they said probably we are going to be competitors, so let's just move away, conflict of interest, blah blah blah. So that's an interesting thing.
I don't think that's the reason. I think Britam has had its own issues.
With the CEO leaving.
Even before then. HF. Before then, like they've had quite a bit of liquidity issues. I think there's been quite a bit of mismanagement that has gone on at Britam. And for me, I feel like this was purely an attempt, or they needed the liquidity, they needed the cash. That's why they had to, because the equity position is a good position.
It is.
So I feel like for them to sell their stake, they needed the capital.
I'd agree with Carly.
And I'm looking at also the decision to go into life assurance specifically was a good decision, because if you look at the insurance structure, the composition here in Kenya, you find that 43% of the insurance market is actually life assurance. So I think this was a good pick for Equity, because they went for something that is sizable.
So you can imagine how that's going to translate to their incomes in terms of commissions from bank assurance. Before it was bank assurance, we just work with the bank. For example, I'd say Equity worked with the Britam to cross-sell.
They're actually brokers.
Being a broker, So you just earn commissions. Now when you are the owner of the cake now,
you get you've moved up the value chain,
totally.
so to speak. So that was a really
for some reason I feel like my recommendation is very obvious for this one.
But then we also have Equity Afya, which has really been growing. So Equity Group went into the healthcare space, and I think now they have around 44 outlets. It's around 15 16 counties around there, but there are 44 outlets in total, and it's really growing. And an interesting thing is, and this is something that I always commend Equity for doing, changing lives, the Equity Wings to Fly program, where they pay tuition fees, school fees for students in high school and universities. So this was so I listened to an interview where James Mwangi was saying that a bulk of the students that they've sponsored to go to university, most of them have gone to study medicine. Now they were asking themselves, now what do we do? So they went into the healthcare space. So if you go to an Equity Afya outlet, the guys who are attending to you are doctors who went through the Wings to Fly program.
Actually, not necessarily. Okay, I have a friend who works at Equity Afya. She didn't go through the Wings to Fly, but probably.
Of course, it can't be everyone. But then, so for me, that line of thought was really.
It shows the genuinity of the whole doing the whole program.
Absolutely.
By genuinity, it means the possibility to make money. But yes, if that's what.
Now, I'm also looking at another.
If you can be genuine and make impact while making money, why not, man?
Kill two birds with one stone. Absolutely. Now, I'm also looking at another interesting development is, of course, with the expansion strategy where we had.
So Equity, I think at the close of the financial year, they had 33 outlets.
Yeah, they've increased now to 44.
44.
Yeah, this is at 3 months ago.
A few weeks.
Yeah. Wow. They've increased that. Now, of course, we all know we've talked about the expansion, into the DRC. I'm expecting a lot of growth in that area, and we also gave them a shout out. Must have been in episode 16 when they had a 15-day tour organized by Equity Bank in collaboration with the government of Kenya and the government of the DRC for Kenyan businessmen to go, for a trade tour and scout. And that was a good strategy. So Equity Bank for me is well placed. I only have one concern.
What's that?
This
guy.
My concern is this, sister.
Yeah.
When I go into social media, and social media is actually a reflection of what people feel and what people do in life. Ni kioo cha jamii, sort of like artists. And I get so disturbed when I see a lot of complaints about banks a lot of issues people have had with interactions with bank, customer service, a lot of issues. And if I praise these issues, 90% of them are from Equity Bank, these complaints. 10% is actually coming from NCBA, but yes, I would understand NCBA.
Their systems are not just two banks.
No. I'd understand NCBA because you're trying to merge systems of two banks. Okay, so I'd understand.
For how long did they?
But then
they managed to tumble.
Okay, let's go back to the 90%. Is Equity Bank, and I'm really disturbed. And Equity Bank should be worried about this. And I hope that the head of customer service and operations are really thinking hard about this. Because if I go into social media and I see the complaints, the things people have gone through, interacting with Equity Bank, and it's my time for me to open a bank account either for a business or for myself as a person.
As a
what? As a person.
Will I go to Equity Bank? Will I go to
I would
Equity
like
Bank?
to know. I haven't been looking at the social media.
Well, Dan, we've had this discussion.
I think
before.
towards the end of the year, there was this, especially thread. There are many people who've been talking, but the biggest one that came out was by Tony
Murega.
Yeah, Tony Murega, and he was talking about how there's this friend of his from back home who was a customer at Equity Bank. He had an agency banking service for Equity Bank, and how it looks like Equity Bank really screwed over this guy. There's a time it
was a huge debacle.
Yeah.
How?
By the charges that they charged him. So I think there's a 1 point he didn't.
And I think there was a fraud element also there.
Yeah. So he was charged up to as much as 18,000 a day on the agency services, and even when so that meant apparently for some customers you come to deposit cash to your account, but then you do not get the entire amount because Equity is taking a chunk of it to recover their costs. So there's been a lot of, and so with this thread, like there are many other, you'd have to go and check the thread.
And you know what, Dan? These issues they just didn't start tomorrow, because I remember
they didn't start.
They didn't start yesterday, or today. I remember in as far back as 2016, I had a friend of mine who lost his father, and his father had around 27 million Kenya shillings in an Equity Bank account. I don't remember the branch. And when his father passed on, when these guys now went to try and look for the money, they found the account to be 0. So for me, I'm really concerned about these issues that are really coming out.
You can't stop that at that. Why?
Yeah, because the money had disappeared.
So they took legal recourse, because it could be a different conversation if the money was in there.
I didn't follow up with my friend what they did.
Yeah, but for unclaimed financial assets,
but
it takes 5 years.
Yeah, it takes
5 years. So I mean, you after 2 weeks of someone dying, so there must have been a fraud element going around there.
Yeah.
Now, for me, the elephant in the room is that when these issues keep coming up, I know Equity has a huge pool, of customers, and sometimes when you have a lot of customers, there arises inefficiencies.
Yeah,
it's expected. But
no, fraud is not a function of inefficiency.
Okay, yeah, fraud of course is something that is intentional, and it's done in an intentional way. But for me, Equity Bank should really address this, because an image is building up on that. An image is building up.
Yeah.
When it comes to corporate banking, I've interacted with their corporate banking. Excellent stuff. 0 complaints, amazing. But then now on this other side of retail, there's been a lot of complaints, and they should really check on that.
It's sad because they're known for retail. They're known for retail.
Yeah, absolutely.
You remember they did a very effective marketing stunt in back, I don't know, in 2009, the Mimi member thing.
Yeah.
And it was very effective. And so it grew. I would attribute growth of Equity to its focus on the common man entry. Right?
Yeah.
So if they're trying to chase this same demographic by all these complaints, I'll be honest, I haven't gone through the social media whatever about what people are saying about Equity Bank, but if it is true, then that's very worrying.
Yeah, because I think for that one, I think guys were advised he was advised to also reach out to the CBK so that they look into it. But even in terms of hidden charges and hidden costs, Equity is quite known for having very many hidden costs. So for instance, even if you go talk to the car dealers all over the place, Kiambu Road, Ngong Road, they wouldn't advise you to take up an asset financing with Equity Bank, because they'd say that the hidden charges that are there are so many. Like they're not transparent in terms of. So you just find yourself slapped with costs here and there. So and that for me kind of makes me feel conflicted in a way, because the fundamentals of equity, its growth numbers have been quite good. The expansion strategy is quite good.
Absolutely.
But then at the end of the day, is it that do I want to be an investor in a business that seems to undercut your own people?
Yeah, because equity has been doing very well, because in 2004 when Equity was becoming a commercial bank, Stanchart and the ABSA, then known as Barclays Bank, they had 55% of the profit market share. The profit market share. Today, Equity is the most profitable bank in Kenya, followed by KCB. Now, guys, what happened to Equitel? You guys remember Equitel?
The same
which was it was also a partnership between Equity Group and Airtel. How did that go? It seems like there was a bit of downward. The curve went downward.
The adoption was so low.
But it was high within the people who were already banking with Equity, because the introduction of that product to their customers wasn't hard
for them.
But then now expanding outside that space, I think, has been really, really difficult. But again, at the end of the day, you can never get everything right. I mean, look at Masoko by Safaricom. So
it's not. But for Equitel, it was, the whole point was mobile money transfer. And I think it was supposed to be a way to get new clients and new customers so that they could take advantage of that.
Did they want to rival M-Pesa on that?
I think the vision
by getting into that business,
the vision was that, but I don't know whether it's because they partnered with
the wrong partner,
Airtel, or the requirement.
Sorry for calling Airtel.
Or it could be either the wrong partner, or what I think is the bigger thing is having you have an Equity account for you to be able to use Equity. That I think if they had somehow linked it to just normal
any other bank,
just any other SIM card, not necessarily pairing it with Airtel and having guys, you do not necessarily have to.
So here you have
account.
You have to have the account with Equity then.
So that if you have mobile money transactions, you can do, like, I think Equitel to Equitel was free.
Even calls, just normal calls on Equitel SIM card to Equitel.
And then to even other numbers was cheaper. But the whole, because I think the same way KCB M-Pesa does. KCB M-Pesa, you do not need to have a KCB account for you to be able to access. Had they taken such an approach I think then Equitel could have been bigger, because the biggest issue that is facing mobile money transactions right now is the cost of
absolutely.
M-Pesa charges, to be honest, are ridiculous, and eventually, in as much as Safaricom and M-Pesa is on a big growth trajectory at the moment, I think it's a matter of time before there comes alternatives that will significantly eat into their revenues. So had Equitel or Equity taken such an approach, they would have probably, because the thing is, having guys test the service and having people enjoy the service, then probably that would have led to people now opening more accounts with Equity instead of having it as a prerequisite. Open the Equity account first for you to be able.
Could you say the same thing now that you've mentioned KCB M-Pesa and KCB M-Pesa and it not needing to have a KCB account to have that service? Would you say that KCB had a significant level of increment in customer base simply by having that product?
No, I've not opened an KCB M-Pesa account.
It's arguable. But then, I mean, if I'm doing business with you on this facility already, I mean, if I can work with you on this facility, you can come or you cannot come, but I mean, we are still doing business. Do you get what I'm saying?
I get you.
Yeah, it's not a must. If I can operate with you here, no need for me to disturb you. But let me take Dan's job today.
And KCB already, they're earning the interest from that.
Absolutely.
So from KCB's perspective, you have a bigger target pool or a bigger pool of customers who are earning you revenue.
It's just a different revenue line.
It's a different revenue stream.
Okay.
I want to steal Dan's job today and become a conspiracy theorist. So look at it this way. So you see the way the partners of M-Shwari and and Safaricom M-Pesa are partners generally. A KCB and NCBA. So probably Equity felt we've been left out. Now let's rival these people. So that is, I've taken Dan's job today as a conspiracy theorist. But an interesting development that also
conspiracy
happened
without any legs. You need time in this conspiracy game.
No foundation.
I didn't take some classes, some crash courses. So an interesting development about payment as well is the PayPal facility. So now Equity transfer of money from PayPal to Equity is going to take a shorter time. It's going to take, I think, a day because before it used to take 3 days. But then for me, I'm looking at this facility and I'm like, it probably won't have a big impact with guys who are using with guys who transfer small amounts of money. Because look at it, the bulk of people who use that, they use it for remittances and also for actually guys who write online writing and people who do jobs for people who are abroad. Now if you look at M-Pesa, transfer from PayPal to M-Pesa, it takes about 3 minutes. Now I'm looking at if I'm transacting 20k, 50k, 80k, why should I transfer it to a bank and for it to take 24 hours?
That's the same reason I was not getting why
already
people are so
tapped into that market.
No, the thing that why people are so excited by that is because PayPal is notorious for if you have a big transaction through PayPal, my God, you have to be a triathlon athlete for the transaction to go through. Like you have to,
and particularly accounts, Kenyan accounts.
Because if it's an issue with that person is now starting to get into my case. If it's something about regulation, and so what they're trying to avoid by having so much checks and balances, which extends the period about completing transaction of these huge amounts, such that they have to they have to address issues to do with money laundering and all that. That would make sense. And
and that's even this from PayPal's end.
Even this equity thing, it won't help.
It would help. Okay, it helps because already from Equity's point of view, they've already done a KYC on you. So Equity, they know you as your client. So if you have a large transaction,
so it's M-Pesa
No, the thing is on PayPal's end for them to approve the payment or the transaction from your PayPal account if you want to move it somewhere else, and it's a big ticket transaction. I will need to check the minimum, but usually they ask so many questions
compared to a small amount.
Compared to a small amount. Makes so they do ask you things such as proof of address. You are a Kenyan. They want you to apparently have and this I experienced this again towards the end of the last quarter of last year.
How much money were you transferring?
No, it was not my money. It was someone who was trying to transfer money. And it was held in PayPal. So it had it's someone who has a startup. So
that's good money.
They had sourced for funding locally, like source for like bridge financing, but then there was someone close some capital financing that was coming through, and the guys sending money were sending it through PayPal. So they sent like a considerable amount of money, but they could not. But this money now was held in PayPal for so long, and they tried sending it, like they were trying to work with even the different payment solution providers, Akina Wise and who Walremit, all these kind of guys. But still, then now the issue was once the money checked into PayPal, getting it out of PayPal was now problem. A hassle. So eventually, what the person had to do was to get a friend who's in the US who has a US bank account, and then get the money transferred to the US bank account, and then do a whole wire transfer to a local, which is expensive.
I also experienced a similar thing. Last year, somebody was sending me money from the US.
Me, I'm not receiving.
And do you know what done? The money stayed in PayPal. They wanted to do that 180 days thing. Me, I told that guy just refund it, like just withdraw it on your end so that it doesn't get to me because it will take 5 years. Anyway, guys,
so that's why it's such a big deal for when PayPal when Equity say, okay, we are going to reduce that transaction, because it mainly affects guys with large. The
problem here was on the delay was on PayPal's side. So it doesn't matter from where you will withdraw these funds. PayPal would have taken as much time as they usually take with the money, doing whatever it is that they do with it.
You're missing it with PayPal, because PayPal already, now there's a relationship established between PayPal and Equity Bank. So because previously PayPal are the one who are trying to do their due diligence on you yourself.
All right.
So in this case, because you're an Equity customer, they do believe that Equity has done their KYC on
so
you.
it takes a short
For
time.
them, they will approve the transaction. The transaction will go through.
All right,
guys. As we close this, Easter, your outlook for Equity. What's your outlook? Where do you see them go? Just give us your outlook of Equity Group.
They're at 1 point something trillion. I see in the next 3 years
they've crossed the trillion mark of
they crossed that last year
of asset
last year. I'm giving them 3 years to triple with their given appetite. With the appetite
triple.
they have,
how are they tripling?
Triple.
Yeah,
3 years.
How are they tripling?
Interesting.
Compounding growth. Compounding growth.
It's
It's entirely on compounding growth. Again,
and you're being optimistic as well.
I mean that's what tripling means. Yeah. So buy, definitely buy. If you have the stock, hold. I don't know. We are getting towards elections, but I don't think this electioneering period will present a lot of uncertainties as the ones we've had before. So
that is yet to be told.
It is my outlook, right?
Okay.
Yeah.
So
Dan Kalia, what's your outlook for Equity Bank?
I think Equity Group. Yeah. It's going to grow as usual, as has been the case.
Yeah.
They wanted to reduce. Yeah, I think Equity wanted to reduce exposure to government assets.
Yeah. By James saying that we don't want to be a lazy bank.
We don't want to be a lazy bank. We want to be thinking, and you can see with this partnership, I think with partnership from IFC.
Yeah, and attached to that, this week the UK Minister for Africa actually advanced a facility of around 5.6 billion Kenya shillings to Equity through the formerly known as CDC, the British Investment Institute, I think. So they are going to give this 5.6 billion to Equity Bank to lend to SMEs. Yeah,
and already they've collected 16 billion from the loan, the IFC loan.
The IFC 14 billion,
So they really are thinking.
Yeah, so it's total actually 18 billion. IFC are doing 13.5. Then other partners are going to top up the rest, the 5, or 4.5. So I think with that, and what I want to know is the rates at which they're getting these loans from IFC.
I mean, they're probably getting it at 3% or 4%. I think 4 is high, 3%, because JICA gives, I think, at around 3% as well. I mean, so these institutional partners and developers, it's a range of from 2 to 4%.
So you can imagine then they on lend it.
Deductive reason.
So you pick that and you give to
Kalia
government at tax-free at 12%. So that's being lazy.
That's lazy, but then you come to give me
Kalia
at 13.5, 14.5. So I think there's the kind of partner with someone, because IFC has deep pockets. With IFC being your second largest shareholder. So even your growth strategy, your growth plans, already you have 18 billion set for
and
this
the
year.
confidence that investors will have now looking at seeing IFC there.
And once Patrick Dr. Njoroge eases a little bit, or I don't know whether he will ease a little bit, but I think eventually after elections he might ease the restrictions on banks and their pricing and allow them to be a little bit more flexible on their risk-based pricing. Then I think banks and Equity in particular would take advantage of that.
So you're saying we buy?
Yeah, Equity. Yeah, it's a good buy. Equity is a good buy based on the fundamentals. I just am not happy with the issues that they seem to have.
The customer relationship.
Yeah, with customers and that kind of thing. I don't know. It makes me feel, those are something. If they didn't have that many issues,
you'd be from an
ethical, moral, and financial perspective, it would be a tick on all ends. Right now, it has a tick on the financial, the ethical bit, and how they are treating and charging their customers and employees also in a way.
It's tricky.
You've had stories about the employees,
guys. So as we close up, for me, I'd say buy. Simply because I'm looking at the DRC. That's a real pocket of growth. I mean, there's a lot that Equity could do from that, and really a lot of growth is coming from that. Yeah, I mean, but they've just entered into the market. I mean, I'm looking at the outlook because as we saw from the half year results that for every 100 shillings that they collect from outside Kenya, around 60 plus a little over 60 Kenya shillings is coming from the DRC, so that's a good pocket of growth. I'm also looking at this is for short-term traders when their full year results will be coming out for 2021. Of course, the market will react there, and it will definitely go up a bit, so that's a good time to make some money. Prepare your cash. Make sure
your cash.
It's somewhere.
This person is preparing.
It's somewhere that you can quickly buy the share.
Cash in the bag.
I'm also looking at equity Afya. There's a good pocket of growth there. The equity life assurance, that's a good place. So the outlook is looking good. Buy that stock.
So even after saying all that, you still think the 3x growth in triple growth.
I don't think they're going to triple in 3 years.
You need to show us
it's unattainable.
Show us your workings.
Give us that financial model. We look at it.
Yeah,
they can't triple.
Now that you mentioned life assurance, we need to have a discussion on life assurances and whether it's something that should be taken or not taken. That whole education policy thing, that is usually quite big. Yeah, we should have a discussion on that.
So, as an insurance stakeholder, we might be knocking on your doors to come have that conversation with you.
You know, I'm in insurance. You remember I was conflicted with Jubilee.
That's why. Okay.
Anyway,
why are you like we?
Me. Why am I?
Okay, we'll have this.
Okay, guys. Thank you so much for listening to us. We've come to the close of episode 18. Thank you so much for staying with us. Remember, you can always
2201.
the first episode of 2022. You can always reach out to us on Twitter at marketmap_KE, on Facebook and LinkedIn, Kenya's Market Map. On YouTube as well, Kenya's Market Map. You can listen to our podcast on Spotify and all the other places. We hope that the credit barometer for Q4 will be coming out very soon, so we might delve into that in episode number 19. Until next time, remember, it's nothing personal. It's just business. Cheers. Stay safe.